going to talk about market structure shift and how to identify when the market, or rather when the trend is going to reverse. Okay, in our last class, we talked about market structure shifts, how to identify higher low, lower high, lower low, higher high, higher low, lower low, and we've discussed that already. Now, I'm going to teach you guys how to identify, or rather, how to know when the price might reverse. Okay, when to know where price might reverse. Now, first of all, I want to talk about time frames. You can see this stuff right here. You can see the 1 minute time frame, the 3 minutes, the 5 minutes, the 15 minutes, 30, 1 hour, 4 hours, daily, weekly, and monthly. Okay, and monthly. Knowing that now, I want to let you know that each of these candlestick right now signifies a whole month. That's why it's the monthly time frame, 1 month time frame of Euro USD. This month, that means this whole of this month we sold, which I predicted. The previous month, the market bought. Alright. Now, if we go to the weekly, that is one candlestick signifies the week. Okay. This is this week. This week is about to close. You can see it right here. There is remaining 11 hours for this candlestick to finish. Alright. That is market close on Fridays. The market don't work Saturday, Sunday. It opens on Sunday night. Okay. So each of these candlesticks signifies weekly, daily as well. Each of these candlesticks signifies daily. So you can see in the weekly, this is just a 1 week long candlestick, right? This is 3 weeks ago. This is a 1 week long candlestick. On the daily, you can see it, right? This is Tuesday. You can see it down here. You can see it down here. This is Tuesday. This is Monday. This is Tuesday, Wednesday, Thursday, and Friday. Okay. So all these candlesticks sell signifies 1 week in the weekly time frame. That being said, we're going to be focusing on monthly, weekly, daily. 4 hours is 4 hours. Each of the candlesticks also still mean 4 hours. 1 hour, 30 minutes, and to the end. When to know exactly when the trend is going to change from buy to sell. This has to be tied with time frames as well. Okay. So now we're looking at the 1 hour time frame. I will also teach you how to identify a fake market structure shifts. There are complete market structure shifts that change the trend from a buy to a sell. Where there's a fake market structure shift. Okay, I'll teach you how to identify that. So how to identify a fake market structure shift. Okay, so let's deal with how to identify a fake market structure shift first. So now we can see price moving. Let me zoom in a bit. We can watch price, right, making a lower high, came back down to make a lower low. Okay, I'm not adding on these ones because we can literally just go bounce up and down. So we're just going to target the major hooks. Okay, so you made a lower low, but let's just say it made here and made this lower high. The price went ahead to make a lower low again. Now here you could see that price shifted in this place, right? Let me mark it to be here, lower high. Okay, you can see what share that price did a market structure shift over here. Okay, now many people will think that okay, the trend has changed. Let me look for entry that will take place. Now the trick is sometimes on a lower time frame right? To look more clear as if the trend has changed. But the trick is to go back to the higher time frame, wait, go to the higher time frame and see if the market, or rather if the candle we close completely above this lower high. Now this lower high is seen as previous high. Okay, this is the previous high. This is where the market was before. Then it went up to the previous high. So how to identify a fake market structure shift is when the body of the candle, this line right here that you're seeing, is a wick. Right, is a wick. This line right here you're seeing is a wick. Is when if the body of the candle close completely. Right, I'll show you another example of how to know uh if the market structure shift was completed. If the body of the candle closed, like now, this one didn't close, this is where it ended. This one as well didn't close, this where the candle ended, this is a sell. Upon seeing this now and seeing this is a fake, you could trade to this low. I will teach you why mark price will reach here. It's called liquidity, but I'll teach you that some other time. That is very, very much complicated. Okay. So, what am I saying? How to identify, I'm coming, you write this down. I'll write it in the PDF as well. How to identify a fake market structure shift is when the body of the candlestick didn't close above the previous high or low. Let me look for another one for you. This was a lower high, went to a lower low, went to another lower high, came back down to make a lower low. Then price made a higher high, right? That's fine. So when price candlestick was here, this is previous high, that is previous lower high, alright, lower high. When price did this at first, let's say this candlestick has not appeared yet. When price did this, we won't assume that price is already about to change the trend from a sell to a buy. You know, some will assume that price everything because now this is a long week. You understand me? Is not decided. This can be a manipulation to sell. So then we wait for another hour. Then we can see this candlestick build up, closed, the body of the candlestick here closed above the previous lower high. Then you can tell that yes, the trend is about to change. In most cases, price might buy, retrace, then go up again in most cases. That is, price might buy up a bit, come down, then go up again in most cases. Okay, but now you can see the body of the candlestick closed above. If to say this one closed below the previous lower high, if the body of the candlestick, the body, I mean this green part, not the lines, if the body of the candlestick closed below this previous lower high, then we'll keep it in mind that price is about to reverse. This is a fake. Okay, we'll keep it in mind that this is a fake and price is going down to sweep liquidity down here. So if you see something like this, we identify this as failed market structure shift. That's F market structure shift. Okay, we see this as F, sorry, is a bit low. You see it as F market structure. That is failed market structure shift. Majority of the time, price will reverse back down. Okay. So now, how to identify a fake market structure shift? I show you. I've already taught you about the body and the wick of the candlestick, right? And I think that's all you need to know for now. Next, we're gonna move to when to know, sorry, or rather, so we're gonna move to how to know when the trend is going to reverse. Right? Give me a sec. Now, how to know when the trend is going to reverse? Now, this will now bring us to the higher time frames. Now, I want to teach you guys PDI rays. These are the tools we will need, or rather, these are the technical analysis that we will need to know when the price is going to reverse. Now, relating to PDI rays, I will drop it in the PDF. This is my own journal. Okay. Relating to PDI rays, we have this. We have old high and low, rejection block, bearish order block, fair value gap, liquidity void, bearish breaker, and mitigation block. Now I'm going to explain this the one after the other. Today we're going to only deal with two. I'm going to teach you guys old high and low. Please pay attention. Pay attention. I'm going to teach you guys old high and low. We're also going to be dealing with fair value gaps today. The rest we'll discuss about the other ones. Okay. So going back to our chart, we have to go to the higher time frame. Now, this is how you know. This is the weekly. This is how you know when the trend is going to shift. Okay, when market is going to shift. Now, fair value gaps. What are fair value gaps? Okay, fair value gaps is a gap, right? It's going to be in the PDF. Okay, I'm going to put the PDF. Let me not make this video too long. Examples of a fair value gap. Let's say this is the candle. Okay, I'm drawing a candle. This is the other candle. To the other candle start from here. This is the other candle, right? This is the week. This is the week of the candle, and this is another candlestick from here. Okay. My chart color is different from you guys, so I'm going to change this candlesticks to red. Okay, because this is a sell. Because this is a sell. Alright, this is a sell. This is a sell. Let me add. This is a buy candlestick. Now, what is the fair value gap? It's in the PDF. This is the fair value gap. The gap in between two candlesticks. Okay. The gap in between two candlesticks. This is the fair value gap. Now, this place is where price is most likely going to go back to refill it. Okay, I will show you an example. Just give me a second. Fair value gap. FVG, that is fair value gap. So it um is the gap between two candlesticks. You can see it right here. This is the fair value gap. This is a fair value gap. This indeed is a fair value gap. Price most likely goes back there. There's a chance that price might go back to this fair value gap right here. Okay. In most cases, once price goes back to it, well, let me show you. In most cases, when price goes back to the fair value gap, you will check your chart yourself. It will be there. In most cases, once price go to the fair value gap back, it sweeps it. It fill it up and then reverse back down. I'm heading somewhere. People should just stay with me. And then reverse back, down, and then reverse back down. Okay. Now, in the higher time frame, this is what you will see, because let's say each of these candlestick defines 1 month. So this is 1 month, this is 1 month, this is 1 month, right? Price went back to the fair value gap. On the lower time frame, this will be many candles. I've explained that for you. Now, since you have an idea that in the higher time frame, once price is sweep away this fair value gap, that is the gap between these two candlesticks, right? It's going to reverse. Then you keep it to your mind that price or the trend on the lower time frame will reverse. Now, let me give you an example. You can see price here leaving this fair value gap. You can see the gap in between these two candles, these three candles. So leaving a fair value gap right here. This is an example. Now we're going to the weekly time frame. All right. Well, let's go to the daily time frame. Okay. If you should stay with me. You can see price making higher high, then it made lower low, lower high, lower low, lower high. This is a fake. You can see this is what I was teaching you. You can see the body of the candlestick didn't pass the previous lower high. This is a fake market structure shift. Oh, I'm so sorry. Your eyes have to be very fast to see these things. The price went ahead. Let me mark it so that it will be easy. Lower low, fake higher high, price made lower low again, price made here. Now you can see that price, this blue stuff right here is the monthly fair value gap. I'm sorry. So this fair value gap right here is where we are right now. You know why in the lower time frame the candles are going to be many. That whole candlestick in the monthly was one monthly candlestick. This right here is different days. You can see Friday, Monday, Tuesday, Wednesday, Thursday, Friday, and so forth. So now we are looking at the daily candlestick. Since we look at the higher time frame and we knew that once price gets to here, the trend is going to change. You understand? As we knew once price gets to here, the trend is going to change. Now we can see price making, where is, we can see price making lower high, lower low, lower high, lower low. The price broke it with a full body, making a higher high. So here is the change. Here is a market structure shift. Okay, here is a market structure shift, MSS. The price usually, most cases, once price does rather, when price have completed a market structure shift, it retrace. Now, what is retracing? This is retrace. Markets don't move straight up, never. If market is buying, it doesn't move straight up. If market is selling, it doesn't move straight down. So what is retracing? Retrace is when markets go up, come down a bit, go up, come down a bit, go up. So it buys, extend, comes back down to retrace. It extends again, comes back down to retrace. You see how it is? Okay, so price went up, made a higher high, then made a higher low. The price went ahead to make a higher high. Now we can see that we could identify, or rather we could tell that price is going to change to buy because of the higher time frame analysis. You understand? Because of the fair value gap. So how can you tell, or how do you know when price is going to change the trend? When price is most likely going to make a true and correct market structure shift? You can use fair value gap. Now this not only works for buy, it works for sell as well. Okay, this actually still works for sell as well. So this is the monthly time frame. You can see it changing in state. Okay, like now this is the analysis of recently. This is the weekly time frame. Okay, where is the fair value gap in this chart here? In this chart here, in just here, where is the fair value gap? We can see this fair value gap. You can see this. Okay, now when I was looking at this chart recently, let's go to the daily. I know immediately price get here. Okay, price get here is going to make a major market structure shift. I was keeping it in my mind that price might make a major market structure shift. Do you understand me? So this is the 4 hours chart. Before price got here, price made a lower high, or maybe a higher high, a higher low, a higher high, higher low, made another higher high, made a higher low. You understand? And it made a higher high. With this break, okay, the market has changed direction from buys to sell. Okay, because this broke out with a full body candlestick. With a full body candlestick. It's not every time that price gets to this my fair value gap that it reverses. No. But majority of the time it does reverse if your line is well to the higher time frame. Let me teach you guys old highs and old lows later. Let me teach you optimum trade entry. Alright. So I think this is important for you guys. So price sell is must surely retrace. This is the retracement. It sells back down again, a retrace, sells back down, a retrace. Now, most people once they see the price retrace, they don't know where exactly price will get to before it will start going back down. I'll show you a tool that you can use, a trading view tool that you can use to know where price is going to retrace to before going back down. Now, I want you to find this in your trading view. Fibonacci retracement is a tool we use. Alright, we have this higher low, this higher high, while this higher low over here. The price made higher high, then it started retracing. So what we simply do is mark from this low, the body of the candle, not the wick, to this high, to this right here. So what we're doing is we're marking for this low, then the 0/0 should be resting on top the previous high body of the candle. So when price gets to these levels, 0.5, 0.618, 0.7, price most likely end the retracement and goes back up. You understand? I'll drop a picture of my settings so that you set yours like mine on your trading view. Forex is not an easy thing, but just make sure if you don't understand any of this video, make sure you rewatch it again. You will understand some stuff, and I'm ready for your questions. Look at this place over here again. You will put your tools from down here. This after price made the market structure shift. You put your tools from down here, put it up. It will get to the 50. Once it gets to the 50, you can now go on your lower time frame and look for a market structure shift. Okay, this is another good example to know when the price is going to reverse. So we have fair value gaps. These are fair value gaps. We have fair value gaps. We have Fibonacci. That is Fib retracement tool. It's on your trading view over there. You can use it. So we have here to here. That is up here. Here to here. Drag it out a bit. You guys, old high and low. This teaching of market structure is going to take a while because this is the foundation of forex trading. Before you go on, this is what will give birth to your entries. Okay, this is a very long video, right? And For you guys that watch this thing to the end and you guys are still confused, ask your question. I will drop a PDF to explain everything more. I don't drop videos without PDF. Okay. So I'm ready for your questions. In the next class, I'll give you guys assignments. But for today, I'm not giving you guys assignments. I just want you guys to study this and understand. Then we'll continue and I will show you how to other ways to know when the trend is going to change. I've already taught you one. See the amounts that we have to know. We have about 1, 2, 3, 4, 5, 6, 7 ways to know the trend is going to change. Okay, 7 ways to know the trend is going to change. I've already taught you fair value gap. You understand me? I've already taught you fair value gap. So I'll try and make the other videos more fast. You know. So see you guys in the next class.